President Trump has insisted that his implementation of new global tariffs is going very well and would help the US economy to flourish. The move has caused turmoil on global markets and sparked concerns it could lead to a recession. In the past hour, European stock markets have opened. This is Frankfurt Stock Exchange, where the stocks are still falling. The DAX fell 3% on Thursday. Early trading has seen the FTSE 100 in London down by more than 1%, while the Paris stock market is similarly down. Well, stock markets around the world plunged to the lowest level since March 2020 and led to the World Trade Organization forecasting that the global economy will shrink by 1% this year. The UK was hit by a 10% tax on US imports. Meanwhile, other countries like China, Canada and the European Union will have to pay a far higher price. British Foreign Minister David Lammy is in Brussels for a NATO summit. When asked about the impact of President Trump's tariffs, he said that all options were on the table.
We are a nation that believes in open trade, and I regret the return to protectionism in the United States, something that we've not seen for nearly a century. As you know, we are consulting with business and industry at this time. We are engaged in discussions with the United States to strike an economic agreement and an economic deal. And of course, we have been absolutely clear that all options are on the table.
With me is Ty Enright, our business presenter. So tell us about this morning and how things are reacting after those big falls yesterday.
Yeah, well, the sentiment continues to move downwards, as you were saying just there. Trading in Europe has been underway for just over an hour now. We had live pictures coming into us from the Frankfurt Stock Exchange. And as soon as that bell rang, well, the numbers continue to fall. That following the trend set in, well, Asia. It was Asia had the first opportunity to react to Donald Trump's tariff announcement on Wednesday. They've had 2 days of trading now, both of which have gone downwards. And in Wall Street yesterday, we saw the biggest fall since March of 2020, that being the beginnings of the COVID pandemic and all the consequences of lockdowns. So you really get a sense of just how seismic a shift investors, so people who are putting their money on the line every single day, betting on the future prospects of various companies, how they're feeling about all this. Interestingly, here in Europe today, as stocks continue to decline, declines of about 1% across the board on the FTSE, the DAX, the CAC 40. It's banking stocks that are particularly suffering. An index looking at the wider banking sector is down by 4%, most likely because of these growing warnings about the recession which could follow these tariffs if they remain in place. We've heard from JP Morgan, the investment bank, saying putting at 60% the chances of a global recession. And a very noted economist, Mohammed Al-Arian, he's now the chief economic advisor to Allianz, the big German financial services firm, saying that the chances of a recession in the United States are now, as he put it, uncomfortably high. So that's the market's verdict on Donald Trump's tariffs.
And meanwhile, we're looking at some of the reactions, some of the countries deciding what to do in response to this.
Yeah, and we don't know exactly what they're going to do just yet. Certainly we've heard tough words coming out of Brussels and out of Beijing. They're talking about robust responses. Exactly what they're going to do, we're still waiting for that reaction. They've talked about being, shall we say, more targeted, more smart in their response, aiming, I suppose, not to penalise their own consumers with the kind of inflation that many people are fearing will happen in the United States. But we still don't have any precise detail on that yet. And when we do get it, well, perhaps that might provide another reason for the markets, for investors to be fearful.
Ty Enright, thank you very much indeed. Let's speak now to Ross Mould, who's an investment director at AJ Bell. Thanks very much indeed for being with us. So tell us what your impression is and whether we're seeing, this is going to continue for several days, or how your appreciation is of the sentiment now in the market.
Yeah, I think the challenge that we've got from the narrow and selfish perspective of financial markets is that all through last year, they were expecting a cooling in inflation, steady economic growth and falling interest rates from central banks. And the Trump tariff trade situation questions all three of those very big assumptions. Prices may now go up. Does that mean that central banks cannot cut interest rates? And as we've been hearing, we have worries about economic growth as well. So their very rosy scenario now looks an awful lot less clear, and that's why we're seeing these very sharp share price falls.
Now, tell us about the real world effect of share price falls, because sometimes people might look at it and think, well, actually, I'm not interested in share prices. Tell us why it's important and what the actual effect is on economies.
I mean, in terms of share prices, a lot of people will have their money in their pension, in shares, in stock markets, and so they may feel, depending on how long these share price falls for or last for, they may feel some impact there. There is clearly a hope that this is a short-term squall, and that President Trump either extracts the deals that he's looking for, or that the globe ultimately finds a solution and a workaround, and that economic growth continues. So this is likely, you would like to think, to be one of those bumps that we get every 5, 10, or 15 years, rather than something that leads to a major problem like it did in the 1930s. But that is one effect that it could have upon people's pensions if asset valuations stay depressed for a long time. But barring the odd exception, that's quite unusual.
And do you expect President Trump to persist with this, or do you see him potentially backing down?
I think that's the next question that everybody's asking themselves, whether it's politicians, policymakers, economists, or investors. Some people are assuming that, I think there's been an assumption till now that this is an art of the deal, that America will look to extract better trade terms from key trading partners, and that this may be a short-term issue that goes away. But there are other strands within the Republican Party who see this as a major revenue generator and a means of cutting income tax. And the president himself is saying he views this as a long-term situation that's worth short-term pain to onshore production to boost American jobs. So that isn't a short-term trading transaction. That is a long-term economic policy. So it really depends where we go from here. If we do get some trades and deals, I think markets will relax. If America sticks to this course and seems determined to do so, they'll stay quite nervous.
Russ Mould, thank you very much indeed for joining us there with your insight. Thank you.